All right, so thank you all for joining our webinar, Credit Reports and Scores, your frequently asked questions. My name is India. I'm with the Genesis team, and I will be your host for today. So we're going to go over quickly a few housekeeping notes. I'll introduce our panelists, and then we'll get right into the Q&A portion. So everyone will receive a recording and handout in your email tomorrow. If you have any questions, all phone lines are muted, so please send questions in the chat. And just be sure to send it to all panelists so that we can see them and we will answer those in the order that they come in if we have time at the end. And then if you any comments, and we'll be sure to answer those questions. So we're going to meet our panelists. We have a nice group set up for you guys right now. So for those of you that aren't aware, Genesis partners with GreenPath to provide our members with access to debt management services and free and confidential financial counseling. So on the GreenPath team, we have for you today Dawn Watson. She is the Partner Experience Manager. We have Amber Miller with GreenPath. She is also a Partner Experience Manager. And then on the Genesis side, we have Peggy Dombrowski. She's our Loss Mitigation Manager. And then Dawn Lalonde, who is the Loan Manager.
Hi.
So we are actually going to jump right into the Q&A. I'm going to go to Dawn Watson first. So Dawn, how is a credit score calculated?
That is a great question, India. Thank you. So there is no one answer to how a credit score is calculated. There are 3 credit bureaus, Experian, Equifax, and TransUnion. Each may have a different score based on who is reporting that information, the data that's being reported, and the method of calculating. In addition, there are different scoring models that are used, such as FICO and Vantage. So in general, there are 5 things to consider when calculating the score: payment history, amount owed, length of history, your credit mix, credit inquiries, which also includes opening up new accounts. 2 of these items do play a much larger role in the overall score. Your payment history makes up 35% of the score. Basically, do you pay your accounts on time? Amount owed makes up 30% of the score. Are you overextended with debt? How much of your credit is being used? While the mix of credit cards to installment loans, how long you've had the account, your credit inquiries, and new approvals combined make up an additional 35%. The most important thing is to ensure the information on that credit report is accurate, which is used to create the score.
Thank you, Dawn. The next question I am going to throw to Amber. Amber, can you tell us how a person can build credit after a financial setback?
Absolutely. So first of all, I just want to say it's absolutely possible to rebuild your credit after a setback, even if you've seen a pretty significant or dramatic impact. You know, life happened, maybe things were out of your control, but now you're ready to get that credit back on track so it doesn't keep hindering your future goals. I want to be honest with you and prepare you for the fact that it's going to take some time and some patience, and it may feel like a little bit of an uphill battle, but it's absolutely possible and absolutely worth it long term. So as far as how, first of all, if any of your accounts fell past due during that financial setback, make sure to prioritize catching those up and keeping those accounts current moving forward. This will start to help rebuild that positive payment history, which, like Dawn just talked about, is that largest factor impacting your credit score. So getting that payment history back on track is important. And if any accounts fell into a collection status, work on a plan to get those outstanding balances paid off as soon as possible too. And then once you've gotten any of those past due balances paid, taken care of, your payments are all back on track, then you'll want to start maybe taking steps towards building some additional positive credit history that can start helping to offset some of that negative impact that you have seen. In just a couple of minutes, we're going to be talking about some credit building products that can be used to build credit from scratch, but they can also be used to help rebuild after a setback as well. Again, don't be discouraged if it feels like you're working hard and not seeing much improvement. It's likely going to take some time, but you're taking the right steps, and that should lead to you starting to see improvement sooner rather than later.
Thanks, Amber. Dawn LaLund, I'm a young adult that has no credit. Where do I start?
Hi, India. Thank you for the question. So Genesis has a few options. We do first-time auto buyer loans with a minimum of 6 months on the job and 10% cash down. Another option is to have a parent add a new driver to an auto loan to help establish good credit history when it's paid on time. We also offer 2,500 credit cards for our young borrowers with a minimum of 6 months on the job. We also have our MSRs counsel them on good credit card usage, paying off monthly, or not using more than 30% of the limit. I think one of the other questions that might have been asked, I think it was part of this, was how a part-time work status. Was that part of this question? How a part-time work status affects your credit?
Yeah, that's fine.
Oh, okay, sorry. So your work status doesn't really affect your ability to acquire credit as long as your income supports the monthly payment. For example, if you have a good credit score, we will finance up to 15% of your monthly income. An example would be if you make $2,500 a month, we calculate a good payment for you would be $375 a month. And that would leave room for your car insurance and car maintenance, which we know is a reality. For unsecured loans, we would calculate your income supports 3 times your monthly income if you have good credit going on. And we also look at if you have similar credit experience. Thank you.
Thanks, Dawn. Peggy, how can you rapidly increase your score?
Thanks, India. Well, I'm loving these questions. Good afternoon, everybody. This is exciting. So, great question. So, how can you rapidly increase your credit score? So, back in 2019, Experian, which is one of the 3 major credit bureaus, launched a product called Boost. And Boost allows you to improve your score and build credit history by reporting your utilities, your telecom, and even your video streaming bills that you pay every month. Experian pulls positive data going back 24 months for each trade line that is related to your utilities, telecom, streaming bills, etc. So Experian claims that this can increase your score within 24 hours. And it's also been reported by consumers that they've seen increases of anywhere from 13 to 47 points on their credit report. You can go out to Experian.com, and there's some really good information out there explaining Boost to you and giving you information.
Oh, no.
Did we lose Peggy?
We lost Peggy.
Okay. She'll probably hop back on, but I think I'll move to the next question until she gets back in, and then she can just finish when she's back on. So I'm actually going to go to Don Watson. Can you talk about how you can obtain your credit report and how to confirm if it's accurate?
Did we lose Don Watson too?
Nope, we were muted.
Oh,
Sorry
okay.
about that, everybody. So the best way to obtain your credit report is to go to annualcreditreport.com. This is, we're entitled by law to be able to receive a free credit report at that location. This is one where you can pull one from each of the 3 credit bureaus, so Experian, Equifax, TransUnion. If you don't want to do it online, you can also call them at 877-322-8228, or you can write them for the request. If you want your score, they can actually charge a small fee to provide the score. And ultimately, we are looking to make sure that the information on that credit bureau is accurate. I would recommend, if you've never seen your credit reports at all, to pull all 3. Otherwise, I would suggest pulling one every 4 months so that you can stagger them and be able to keep tabs on that credit score throughout the year. There are also some financial institutions that will provide you a score, and then that will also alert you if there is any new updates that are affecting that overall credit report. So that's another great way to be able to get access to the credit report. Thank you.
Thanks, Dawn. So moving on, I'm going to go to Amber. Amber, does having several credit lines affect your credit score?
Great question. So the short answer is yes, having several credit lines will impact your score. The longer answer is that that impact could be either positive or negative, depending, of course, on how you're managing those credit lines. So earlier, when Dawn was talking about the different factors that go into that credit score, she talked about credit utilization being the second largest factor that impacts the credit scores. So when we talk specifically about what are called revolving accounts, which would be like a credit card or a line of credit where that balance could go up or down from month to month, credit utilization measures how much of the available credit limit you have access to and compares that to the amount of available credit that you are using at the time. So the lower you keep your balances compared to the maximum available credit that you have, the better that is for your credit score. So if you have multiple credit lines open and you're keeping those balances pretty low, great. This could actually be helping your credit score pretty significantly. However, if you are carrying high balances or are struggling to juggle those multiple due dates and are starting to fall behind on payments, with it being a challenge to keep track of, that can of course start to have some negative impact on your credit score. The positive thing as well is, like Dawn mentioned, having a mix of different types of credit can help that credit mix. So having some different forms of credit lines open can be a positive thing as well. Sometimes people will ask, and I actually did already see this come through the chat as well, whether you should close a credit card after you pay it off. And people wonder what impact that would have on the credit score. So there's a couple of ways that this can impact your credit. So first, when you close an account, whatever available credit limit you had on that account comes out of the mix when your utilization is calculated overall. Second, if that account has been open for several years, closing it can take that out of the mix when it comes to your length of credit history as well, which is another of those factors impacting the score. And the longer the accounts are open, the better that can be for your score. So in general, from strictly just a credit standpoint, it's typically in most cases going to be better, again, strictly from a credit score standpoint, to leave those accounts open and keep the balances low. However, again, if keeping the cards open tempts you to maybe spend more than you should, maybe you're carrying higher balances, or maybe it's an account that has like a annual fee that you don't really need to be paying for that's costing you money, then it's important to start weighing the pros and cons of all of this compared to the credit impact you may see if you were to close that account.
Thank you, Amber. Dawn Lalonde, what is the quickest way to pay off high interest credit card debt? And Dawn, you are muted if you are speaking.
I was speaking. So the quickest way to pay off high interest credit card debt is to consolidate into one loan. That way you have a fixed term and you know when it'll be paid off. For example, if you look at your credit card statement, it shows how long it will take you to pay off your balance, just making the minimum payment, and it could be in excess of 20 years. Another great option is to use free and clear collateral, such as an auto or a home equity that might have some good tax benefits for you. Using collateral will get you a better rate in a longer term. Thank you.
Thank you. Peggy, what's the best way to clear your credit report of old charges?
Oh, wow. Another good question. Okay. Hopefully you guys aren't going to lose me this time, but I'm back. So it kind of depends what we're talking about here. Are we talking about derogatory information or just old credit history? Derogatory information usually falls off your credit report in 7 to 10 years. However, if you have an issue and you think that some of that derogatory information is not correct or not being reported correctly, you as a consumer have a right to go ahead and dispute those derogatory items with the 3 credit bureaus. You'll be asked to contact the credit bureaus and give them an explanation for the dispute, and then the creditor has 30 days to respond to that dispute. The other thing you can try to do, not always successful, but you can write a short letter of goodwill to the creditor asking them to have the item removed from their credit report. You want to make sure that you give a valid explanation of what the history was for that derogatory information being reported. The other thing, if history contains a trade line that has not been paid, say it's a charge off or something that has gone to legal, make it a point to contact that creditor, offer up an agreement to make a settlement on that debt. Anytime you make a settlement on a debt, the creditor is required to go ahead and report that on your credit report as a settled trade line, which is always more positive reporting than anything that may be a legal account or something that's been charged off in the past. If we're talking about an old charge that has, or an old trade line that has positive information, as Amber was talking, we never want to get rid of that old information off of our credit report. The longer that you have positive information on your credit report and the older that your information is on the credit report is always a positive, and you never want to have that cleared or removed from your credit report. Okay? Thank you.
Thanks, Peggy. The next question is for Don Watson. How is a student loan that has been transferred from one corporation to another supposed to be listed on your credit report? And then also, we had a question come through with Tamika that kind of goes along the lines of this, of how a student loan being transferred affects your credit score. So if you could answer those for us, we would greatly appreciate it. Thank you.
Absolutely. So student loans can be transferred from one service to another. Many of you may have seen that change happen to you in 2021, as several servicers no longer were going to manage federal student loans. So those would be Navient, PHEAA, also known as Fed Loans, and Granite State. So if you had one of those, your loan would have been transferred. So I think part of this question can be, make sure you know who your new loans are. If you don't have any idea, you can log into the federal student aid account at studentaid.gov so that you won't miss any payments when those start to resume, anticipated in May of this year. Now, the old servicer should report the account with a zero balance, and that information, that previous on-time payment history that you had, would continue to be available and on that credit report. If they don't zero out the balance, then that's something that you definitely want to file a dispute, because then the new creditor is going to report, or the new servicer going to report the balance and your future payment history. Now, anything that you had done with the old servicer, so if you weren't on time with your payments, that information is going to be able to still stay there. It's not just going to disappear, but there would be 2 different trade items on there. Now, if you choose to refinance your loan, that's going to be completely different than changing of your servicer, because this is a choice that you're making. So this would end up then being a new credit inquiry, a new loan, and that is going to have more of an impact on your credit score than, the servicing of the changing of the servicer really isn't going to impact it. Now, as far as the second part of the question in the chat, does this high balance have an impact on the credit? The student loan is considered a secured fixed loan obligation. It's not like a revolving credit card. That utilization is tied to those revolving credit cards, not like your mortgage, your car loan, or student loans. So carrying that balance isn't in itself going to have an impact on that part of the credit score. I mean, it is going to have an impact on your overall ability to get credit if you're overextended in your budget. So if your debt to income ratio and some other things are going to impact it, that might have an impact on the ability to get credit, but not necessarily the score. So good question.
Thank you, Dawn. Amber, can you explain to us why every creditor does not have to report to all 3 credit bureaus?
Sure. So some creditors choose not to report to all 3 of those credit bureaus, which again are Experian, Equifax, and TransUnion, quite simply because it actually does cost them money to report. So this is especially true for maybe smaller creditors or collection agencies. They're maybe choosing not to report just because it is a financial expense for them. Some creditors may also have one preferred bureau that they work with, so they may choose to just report to that bureau for that reason as well. This is another reason that it's so important to pull all 3 of those credit reports from annualcreditreport.com every year, like Dawn mentioned earlier, and review all 3 of those reports in detail, because there is a potential that there could be different things reporting if different creditors are only reporting to 1 or 2 bureaus versus all 3. So this just helps you know everything that's being reported in your name across all 3 bureaus, and just knowing that there can be some differences and keeping an eye on that is really important.
Thank you, Amber. Dawn Lalonde, what are the best steps to take to apply for an auto loan without having several hits to your credit score?
Hi, thank you. So one of my recommendations is a really good option to have when you're shopping for an auto is to utilize these tools. Go to your financial institution and get a pre-approval. That way you have that tool and you can present that to the dealer and request that they don't send your application to multiple other financial institutions. Another option is to ask if any finance companies are offering any interest rate promotions or specials to avoid having your application sent everywhere as well. A lot of financial institutions will also try to match someone else's rate to keep the loan. So be armed with the tools and the knowledge. Thank you.
Thanks, Dawn. Peggy, my credit score seems stagnant and I need to know what to do to increase it. Peggy, you are muted.
So sorry. Okay, so earlier I had talked about Boost, and Boost is one way to kind of give your credit score that little lift that it might need. But another way to increase your score is to work at decreasing balances owed on credit cards or line of credit loans that you may have. So you might remember Dawn and the Dawns, I'll call them, had talked about how a credit score is calculated and also watching limits or capacity or utilization on your credit cards. So Dawn had mentioned that 30% of your score is usually calculated on outstanding balances or utilization of the credit that you have. So it's important to watch your credit card balances and their utilization, meaning the limit versus what the balances are. Credit cards are pretty volatile types of credit, and they have a large impact on your credit score. So maxing out limits on your credit card is really not the best thing to do. It does have a large impact on your score. So wanting to go ahead and decrease those balances is a process that you have to really be committed to. And it's going to give your credit score a jump start and help increase it at the same time. So this is a little plan that I put together for some of our members here at the credit union, and it seems to work. But again, we've got to be patient when we try it. So you pick a credit card, and you pick a credit card that would have the highest balance. So then the key is to pay more than what the minimum balance is. So a good goal to start with is maybe doubling up your payment. So if your creditor says you need to pay 3% of the balance, which is the minimum payment, then make 6% of the balance. Start there. And this will start to open up capacity on this credit card or utilization on this credit card. And the important thing that you need to do is to get that utilization or that capacity under 50%. So getting that capacity under 50% will then start bringing that stagnant score up and of course help increase it. So going with that plan, once you get that utilization on that card, maybe at 40, 45%, then move on to the next card with the highest balance. And then start making more than the minimum payment on that. Again, increase it, maybe double it, maybe up it to 7% instead of the minimum 2% that's due on it. And then use that method continually going through with your credit cards. Then once you have those credit cards under that 50% capacity, make sure you keep them there. That's going to continue to keep that score level. Of course, it may become a stagnant score, but it'll be a higher score than what you originally started out with. So capacity and utilization is really, really important when we're talking about credit cards because they're part of that 30% of your score that is calculated to make the full score, your full credit score. So again, the important thing is capacity low will bring a score up higher. So low versus increasing.
Thank you, Peggy. Don LaLund, can you tell us which credit union is best to get an approved loan through to assist with building credit?
Well, Genesis Credit Union, of course. So we offer share secured loans at low rates where you secure some funds in your savings account. Genesis will give you a loan against it and it establishes a secured trade for you to help build your score. We also have a credit builder loan where the funds are released to you once the loan is paid off. I recommend this loan to use towards paying off collections if they're present. And this will help build the credit score by removing the derogatory info and you have successfully paid off a secured loan. Thank you.
Thanks, Don. This is actually a great time for us to kind of pause. We are coming up on 30 minutes, but we will actually stay on for another 15 minutes to answer the questions that came through the chat. If anyone does need to hop off, you guys are more than welcome. Again, we will be sending this recording out tomorrow. But for those of you that can stay, we are going to roll right into the questions that came through the chat. So the first question comes from, let me see, it was about Credit Karma.
Shirley.
Shirley, yes. So is Credit Karma a reliable source to check your credit score?
I can take that one. So typically most lenders do use the FICO score to evaluate a borrower's creditworthiness. Credit Karma actually uses the Advantage 3.0. Now, both models use the same range, 300 to 850, but they do place different weights on the components of the credit. So that can have a slight difference in what the ultimate score is. So, you can definitely use the Credit Karma score, but don't assume that that's 100% exactly what the lender is going to be looking at, but it is going to give you a good base of knowing what you might need to do before applying.
Thanks, Don. And I'm sorry, that was actually Crystal's question, but Shirley does have a couple of questions in here. Her first one is, if you're on a payment plan with a bank to pay off a credit line, does it reflect negatively on your credit report? Amber, I'm going to send that one over to you, if that's okay.
Sure. So it really depends on what type of payment plan it is, what the arrangement is, if it's an account that had fallen past due or to collection status. I'd have to say it really kind of depends on what the exact situation is, and maybe Peggy can speak to this a little bit more clearly from the Genesis standpoint as well, on how you all usually handle repayment plans.
Yeah, thanks, Amber. This is another great question. So if you're on a payment plan with a financial institution, they are required to report every payment that you make. So if you're starting to take that credit line or that particular trade line out of a negative situation, then any payment that you make is a positive reflection on your credit report. And I think I had mentioned earlier about making settlements also, like you have the right to offer up a settlement to a creditor regarding a trade line or something that may have fallen past due. So anytime you do anything positive against that trade line, even though it's in a negative status, it will start to improve on your credit score because the creditor is responsible for reporting anything that you do on that trade line. I hope that answered your question.
Thanks, Peggy. And then another one from Shirley. What effect does it have on your credit score if you make one large payment or multiple payments during a payment cycle on your credit card? I'm going to assume it says credit score, but I think credit card.
I can grab that one. I can't answer this one. So it doesn't necessarily have any different impact as far as when you make those payments. Most creditors report to the credit bureaus once a month. So they're looking to see, hey, where's this balance at right now? Was this payment made on time? So it doesn't necessarily have any impact one way or another as far as if you make 5 payments during that payment cycle, or if you just make one payment, as long as at least the minimum payment is paid by that due date. And then seeing where that balance is at is really what has the impact when that does cycle.
Thanks, Amber. And I think you actually probably hit on this question a little bit. But Dennis sent in, if you have a rebuild type of credit card and have had it for several years, but now want to close it because you're being charged monthly to have it, will it impact your credit score significantly? Say if you've had the card for 3 to 5 years.
Yeah, with that, there's so many moving pieces with credit. You and I could have the same account and closing it would have completely different impacts on both of our credit scores because of all of the different moving pieces. So I would say, talk to somebody, take a look at those credit reports with somebody who can give you some guidance on this and help you understand a little bit more specifically how it might impact your score specifically.
Thank you. And then we have 2 more, one from Tamika. How does medical collections affect your credit report? And will paying them off harm or help your score?
I can answer that. So anytime you pay on something derogatory or negative on your credit report, it definitely will have, a more positive impact on your score. Personally, I know when I review loans, I don't hold the medical collections against someone. Although, yes, it does affect your score and it does affect you getting a better rate. So my suggestion is to pay those off, and sometimes they just automatically go to collections and you never got a bill for it. You can dispute that with whoever submitted it to collections. But yes, it's very important to pay that off whenever you can. It will help your score.
Thanks, Dawn.
Thank you.
And then Daryl would like to know, what is the best way to increase the line of credit for revolving instruments like credit cards?
I can answer and kind of tell you what our recommendation is. So when I'm reviewing someone's credit report, looking to see, how much I would want to increase it, I look at what kind of experience someone has had. If you say your largest credit limit has been $3,000, I may not give you, like a $20,000 credit card. My typical rule of thumb is to maybe increase your limit 125% over the amount that you've had experience with. So for example, if you've had a $25,000 credit card, then my rule of thumb would maybe be to increase it to 31,000. And hopefully that answers your question.
Thanks, John.
You're welcome.
We have another question that just came in from Tamika. So she says that her credit report has multiple instances of no data for payments that she knows she made. Does that have an impact on your credit score if you have no missed payments for those accounts?
I'm going to go ahead and grab that one, India. Tamika, it's a good question, and I have seen, in over the years pulling credit reports for some of our members, I've seen information where it says no data. And a lot of times the creditor is just not reporting that information for maybe a month or two. It should not have a negative impact on your score. But you do have a right through the credit bureau to send through a dispute, just to double check and make sure that that data is being reported correctly. But several times you'll see creditors for a few months that are not reporting any data. They could be going through a system change or a system update. But again, Tamika, you do have the right to go ahead and file a dispute with the credit bureau, and just so that they'll validate that information for you to see that there is positive reporting that's taking place.
Thank you, Peggy. I have a few additional questions as well. If you guys are still on, feel free to continue to send questions in. We'll probably stay on until about 1:45, but we had a question that what has the most positive impact on your credit score?
I can take that one. I think we've mentioned it a couple times, but to kind of expand on it, really paying your bills on time is going to have that largest impact. Once an account goes 30 days past due, they're going to report it to the credit bureau, and the further past due it becomes, the more that's going to have the impact. The older the past due accounts become, the less they will have that impact. Of course, if you had something to the extent of a bankruptcy, repossession, foreclosure, or charge off, those are definitely going to have a significant. So my recommendation is, again, making sure your payments are paid on time, communicating with the creditor if you're going to struggle being able to do that, because they might be able to do something to help you so it doesn't get to that 30-day past due point. Being aware of your account status, checking that credit report will also help you be aware so that things can remain positive.
Thank you, Dawn. And then just again, going along with what has the most positive impact, we can also touch, and I think we have a little bit, but what has the most negative impact on the credit score?
I can grab this one. So, from a month-to-month standpoint, just like Don said, starting to fall behind on those payments or having accounts go to collection, charge-off status. From a bigger picture standpoint, larger matters like a bankruptcy or a foreclosure or a repossession are typically going to be things that would have the most negative impact on a credit report or credit score.
Thanks, Amber. And then we have, how do I help my young adult build credit? So I know Don Lalonde touched on, if a young adult does not have any credit, where do they start? But how are we continuing to help them build credit?
So I'll answer that. And again, when we get young borrowers in here, you have to think, the young borrowers are our future, and we want to teach them how to properly use credit. So we do make sure to counsel them, this is the best way to use your credit card. As long as you have 6 months on the job, we will try to help you out with something. we like you to establish history with us, you know, bring us your direct deposit, have your checking account with us, you know, be loyal to the credit union and you get our loyalty in return.
Thanks, Dawn.
You're welcome.
And then we have another question that came in, and I apologize if I get your name wrong, but Jarrell, I think. So he wants to know his credit report has student loans listed for the same amounts for multiple lenders. It appears as if he has several more loans that he actually has. Can he dispute this information to have the previous lenders removed if the loan has been sold? And if I need to repeat that again, let me know. Sorry, that was loaded.
That I can take that. So yeah, is if the servicer is changing, the trade line is going to be able to remain there, but the balance should be updated to 0. So if you have the same loan reporting for multiple servicers, then yes, most definitely you'll want to dispute those old ones to have that updated to reflect the 0 balance.
Thank you. And then we only have one more question unless anyone else wants to send anything in. Kind of generic, and it's how long does it take to improve a score?
I'll go ahead and take that one, India. Good question. Very, very good question. Again, I know that I got cut off during the conversation that I was having with Boost, and just let me go back and talk about that real quick because I don't know if everyone heard everything that was going on with Boost, but Boost is again through Experian, and they claim that they can boost your score within 24 hours. Again, this is a reporting of what you have as far as your utilities, telecom, meaning cell phone, telephone bills, and streaming products that you may have. Consumers have said that Boost has raised their score 13 to 47 points, and they claim that that can happen within 24 hours. So I also talked about the situation where you want to bring down the capacity between the capacity and the utilization of credit cards. I have seen people, and again, you have to be patient, but I have seen people that have improved their scores 60, 70, 80 points within 6 months of just reducing the balances on those credit cards. Credit cards, again, are a pretty volatile part of your credit report. And it's a volatile situation or a volatile piece of credit because it's one that can really get out of control if it's not managed properly. And again, just reducing those balances and opening up that capacity, you should see a large change in your credit score within 6 to 8 months. Now, again, I don't know what else you might have on your credit report that could be affecting that. You've got to remain diligent, not go out and start opening a lot of new credit or being past due on other accounts, but you've just got to remain diligent in keeping the credit that you have current and trying to reduce those limits on the credit card. So I hope that made sense.
Thanks, Peggy.
Can I add to that real quick?
Of course.
One thing that I've heard reiterated numerous times with members that have filed bankruptcy is they were told to open new trades. And one of the things that I've seen is they open numerous new trades, and that isn't helpful. So, just try and just maybe open one trade, establish a good pay history on it, and that should help. But opening a bunch of new trades is it looks like red flags to a financial institution. Thank you.
Thanks, Dawn.
You're welcome.
All right, we are going to wrap this up for the day. Wanted to thank you guys all for joining us. If you do have any specific questions, we're going to put our contact information on the screen. You're more than welcome to reach out, and we are always here and ready to help. But thank you guys all for attending. Have a great day.
Thank
Bye,
you.
everyone. Thank you.